Hey, it's Tyrone Jackson, the Wealthy Investor, coming at you again with another hot educational stock market investing video. All right, today on this video, we're going to talk about social media stocks. You know, they're all the rave right now. Should you own these social media stocks? But I have to say, if you don't already like the Wealthy Investor on Facebook, you see down here we already have 13,700 fans, and I thank you all for that. Make sure you go to Facebook and you like the Wealthy Investor. That way you'll get access to me and information, all these wonderful videos, just by being a Facebook fan. Now, the number one question I always get on Facebook is, Tyrone, I'd really like to start trading. Is there a book or something that I can do? Well, you know, it's so interesting because if you just go here at thewealthyinvestor.net, that's thewealthyinvestor.net, simply click on my picture, you can take my online workshop. And for those of you who've been following me for a while, you know that I keep things extremely simple. I teach stock market trading and investing, from what I call the Sesame Street approach. So even if you know nothing about investing, take the online course. It's at thewealthyinvestor.net. Just click on it. It's right on the home page, and you'll be in 2 minutes. You'll be engrossed in this course, and it's really great, and you'll really love it. Now, let's get to today's lesson, which is all about social media. All right, I'm going to give you a little history lesson here in the stock market. A lot of investors and what we call speculators in the market, it's a fancy word for saying people who guess, got rich off of stocks like Google. You see Google here, which is now trading at $605 a share. Well, imagine back in 2006 if you actually got your shares around $50 or $75, right? Would you be happy with that investment today? People who put in $50,000 or $100,000 in Google back then found themselves with hundreds of thousands or millions of dollars worth of shares. This little dot here on Yahoo Finance tells us that there was a stock split. What this chart doesn't indicate is that the stock split, they split the shares. It was a complicated split. They split it into a different class of shares. But the price that we're looking at now, long story short, is split adjusted to 605, which is where the stock invested today. Now, I'm going to teach you something that you're not going to hear anybody else, that stock market investing is not just about guessing, it's about discipline. You want to follow a pattern of investing over and over and over so that you can achieve the same or similar results. Let me say that. Investing is about investing with a discipline over and over, excuse me, so you can receive the same or similar results. So back in the internet era, right, when everybody was betting on who would be the winner in search, Google was a big winner. Okay, obviously, because we all use the phrase, if you don't understand something, Google it. Well, what about social media? What about stocks like Yelp, for example, ticker symbol YELP? What about stocks like Twitter? Look at this picture of Twitter. Would you want to drop $50,000 in Twitter and have this happen? Look at stocks like Facebook. Facebook has been publicly traded for a shorter period of time. Would you like to be in this stock? Well, what is the difference? Well, Google has something called annual revenue. So for in Yahoo Finance, we click on the income statement. They not only have annual revenue, but do you see how it's rising? 37 billion, 50 billion, 59 billion. Well, that's what pushes a stock price higher, is the amount of revenue. So you're not guessing. If you follow this particular type of revenue, which is called top line revenue, you'll notice it's like the company's gross income statement, that the revenue is growing sequentially year over year. All right, so that's a big part of investing. So let's take a look at Yelp, part of the new landscape in terms of social media and how people find out and get information. Look at Yelp's stock price. You see that once it's gone public back in January, it's been very volatile. This represents volatility. Excuse me, then the stock took off and went from 20 all the way up to 70, dropped back down, then went all the way up to 100. You see this peak here at 100, then went all the way back down to where it is now, which is $68.70. The question is, does Yelp have strong top-line revenue? Well, let's take a peek. If we click here at Yahoo Finance, this is $83,137,232. Yes, it has annual revenue that is growing, but here's the problem with something like Yelp. Yelp the size of the shares in the marketplace is known as the float. It's very small, and that float is being manipulated right now by speculators and traders. So even though the revenue is there to support that stock going higher, you're going to be in for a very, very wild ride. And we don't know that annual revenue growth that we looked at is going to continue. So you wouldn't take, if you had only $3,000 or $5,000 to put in the stock market and put it all in Yelp, because you'd be speculating, be putting all that money at risk, which is not what you want to do. But let's take a look at Twitter. Twitter follows an interesting pattern. Look at Twitter. You see when Twitter came public, it dropped down, then all of a sudden it rose up to $70 a share, then it dropped down, and then it continued a downward spiral. And look at this, all the way back down to $30, and then recently we see this retracement here, and the stock starting to rise. Social media and advertising online is not for everyone. If you take all your money and you put it at Twitter, imagine if you bought the shares at $70. Would you be happy today? No, you wouldn't. It's too much risk for you to be in social media stocks and not understanding the patterns of the stock. And here's the other key, whether Wall Street favors the stock. Now, again, I'm teaching you things that you're not going to find anywhere else. No one's going to mention this on their blog or in any of the materials that you see written or on CNBC. But let me help you out with this. When you invest in any stock, Wall Street has to like it. The institutions have to like it. Look at this picture. I always teach you by picture first. Does this look like a picture that the banks and institutions and college endowments and insurance companies are investing in? No. So it's not just about our educated guess. We want to see Wall Street behind a stock. Now, by contrast, look at this. This is Facebook. Now, there were some problems with the initial IPO. The stock went down, and you see this volatility in here. And all of a sudden, we're getting that rise in Facebook shares. This is a stock that Wall Street seems to favor. And based on their recent revenue, this stock should cross $100 a share within the next year because there's all this big money behind it. Is the revenue there to support Facebook stock going higher on an annual basis? Let's take a peek. Here it is. All right, 3 billion, 7, 5 billion, 7.8. That is consistent year over year top line revenue growth, which should send this stock higher. But here's really the key. It's not about just sending the stock higher. The question is, does Wall Street like it? Do they like the story behind Facebook? And you're going to know that by looking at a chart, a picture just like this. Now, I'm going to cover more social media strategies and investing and trading strategies and videos that are to come. If you haven't liked us on Facebook, please go to The Wealthy Investor, Facebook The Wealthy Investor, and click like. And that way you'll get all this information here that I have on the Facebook page. We do a little vision work. That's really great. We talk about being kind to people and the profits that we make. But look at all these charts and analysis that actually go on the Facebook page. If you're already a Facebook member, guess what? That's me with some of my students there. They're all making money in the stock market as cover call writers, and I absolutely love it. Okay, so make sure you go to Facebook and you actually like us on Facebook online, and it's totally free. What's the next step? Back to thewealthyinvestor.net. If you're really hungry for information about how to get started trading, writing covered calls to generate monthly income, volatility trading, how you should open your account, then you want to be at thewealthyinvestor.net. Click on my picture and you can get started with the online workshop. It's a 4-hour workshop, but within 2 minutes, you start the financial education that you need to learn how to grow and trade and make money in the stock market successfully. This is Tyrone Jackson, the Wealthy Investor, saying happy trading.